Hey there, let's unpack this fascinating development in the world of finance. It's a whirlwind of activity, I'm telling you that. Bitcoin, that digital darling of the investment world, has broken through the $50,000 mark for the first time since late 2021. It's like witnessing a comeback story unfold right before our eyes. And who's driving this resurgence? Well, it's none other than the financial heavyweights like BlackRock and Fidelity, along with a slew of Bitcoin ETFs, 11 to be precise. Now, these ETFs are not just dipping their toes into the Bitcoin waters. They're diving in head first, gobbling up Bitcoin at a staggering rate. In fact, they've managed to vacuum up a whopping 5% of the entire tradable supply of Bitcoin in just 30 days. Wrap your head around that for a moment. It's like witnessing a feeding frenzy in this asset realm. But what's driving this frenzy, you ask? Well, it's a perfect storm of factors. BlackRock and Fidelity, two financial behemoths, have both managed to rake in a cool $3 billion each in just their first 30 days of operation. That's unprecedented in the world of ETFs. And they're not alone in this Bitcoin bonanza. Other players like Bitwise and 21 Shares are poised to hit the $1 billion mark soon. Now what's truly mind-boggling is the sheer magnitude of the inflows. These ETFs are slurping up Bitcoin to the tune of $500 million a day, while only 900 Bitcoin are entering the market daily. That's like trying to fill an Olympic-sized swimming pool with a garden hose. The demand is simply outstripping the supply. And here's where it gets even more intriguing. Most of the Bitcoin out there isn't even in circulation. About 80% of it has remained untouched for the past 6 months. So when you consider that these ETFs have managed to snag 5% of the tradable Bitcoin in just a month, it's clear that Bitcoin has firmly entrenched itself as Wall Street's new golden child. Now you might be wondering if this flood of institutional money is going to move the needle significantly in the grand scheme of things. After all, Bitcoin's market cap is already hovering around $1 trillion. But let's put it into perspective. These ETFs have managed to commandeer a sizable chunk of Bitcoin's tradable supply in a remarkably short span of time. It's like watching David take on Goliath, only this time David has a team of financial giants backing him up. But amidst all this excitement, there are still questions lingering in the air. Is it too late to jump on the Bitcoin bandwagon? Will Bitcoin continue its meteoric rise, or are we in for a reality check? These are the kind of uncertainties that keep investors up at night, pondering the future of finance in an increasingly digital world. Let's dive deeper into the recent developments with Fidelity. They've just unveiled an all-in-one fund in Canada, and here's the kicker. They're planning to allocate 1 to 3% of that fund into the Bitcoin ETF. Now what does this mean for the broader investment landscape? Well, it's not just about direct inflows into Bitcoin ETFs anymore. We're talking about a potential ripple effect where Bitcoin finds its way into a variety of investment portfolios. Think about it from a risk-reward perspective. Adding even a small percentage of Bitcoin to these portfolios can significantly enhance their performance. It's like adding a secret ingredient that turbocharges your returns, and as more financial institutions catch on to this strategy, we could see a widespread adoption of Bitcoin across various investment vehicles. Now let me be clear, we're not fortune tellers or financial advisors. We're just sharing what makes sense to us. But here's the thing. With Bitcoin trading below $69,000, it presents a compelling buying opportunity. We're still over 27% down from the all-time high set over 2 years ago. Sure, there might be some ups and downs along the way, but the fundamentals of Bitcoin have only strengthened over time. Now looking ahead, we wouldn't be surprised if Bitcoin surpasses its previous all-time high. The demand for Bitcoin far exceeds its daily supply, especially considering the upcoming halving event that will further reduce new supply. It's like a perfect storm brewing for Bitcoin's resurgence. But here's the curious part. Despite Bitcoin's price reaching $50,000, retail interest seems surprisingly low. Take a look at Google Trends for crypto and Bitcoin. It's like crickets chirping. It's baffling to think that over 8 billion people on this planet, and there are just so few seizing the opportunity presented by Bitcoin. Now, if there's one thing that keeps us up at night, it's the possibility that the returns from Bitcoin might taper off over time. As Bitcoin becomes more mainstream and its holder base evolves, we could see a dampening effect on its returns. This is particularly true as financial advisors begin rebalancing portfolios to adjust for increased Bitcoin allocations. But let's not lose sight of the bigger picture here. While Bitcoin might not be the best ticket to early retirement for everyone, it's certainly poised to outperform traditional stocks. And in a world where economic realities seem to have taken a backseat, with trillions being printed out of thin air, the sky's the limit for the valuation of assets like Bitcoin. It's been quite a journey for ETH, still lingering at 46% below its all-time high from over 2 years ago, but here's where it gets interesting. Major asset manager Franklin Templeton has now thrown its hat onto the ring, joining the Ethereum ETF frenzy alongside heavyweights like BlackRock, Fidelity, and ARK. It seems like everyone is betting on the next big thing being an Ethereum ETF. But amidst this excitement, there's a bit of a frenzy brewing in the Ethereum ecosystem. Ethereum gas fees have skyrocketed to an 8-month high, fueled by the ERC-404 craze. Now, this surge in gas fees is driven by the rush to capitalize on what many believe could be the early stages of a significant trend. Now let's talk about ERC-404. It's kind of a big deal. This experimental standard aims to bridge the gap between ERC-721 non-fungible tokens or NFTs and ERC-20 tokens, which basically covers the entire spectrum of tokens in the Ethereum ecosystem. This allows for what some call fractionalized NFTs, where multiple wallets can collectively own a single NFT and use their portion for trading or collateral for loans. But here's the thing, ERC-404 isn't without its challenges. The spike in gas fees, for instance, is a direct result of the increased complexity of ERC-404 transfers compared to the more traditional ERC-721 transfers. And while ERC-404 shows promise, there's also competition on the horizon. Enter ERC-20721, claiming to be better. Time will ultimately be the judge of which standard prevails in the long run. Now, shifting gears a bit, let's talk about some exciting developments in the world of altcoins. The Sui Foundation has just launched a blockchain academy in collaboration with UAE University. Yeah, you heard that right. The United Arab Emirates is now integrating blockchain education into its curriculum, putting Sui on the map as a player in the long-term game. And speaking of long-term visions, the artificial intelligence crypto project AIT is making waves with its decentralization efforts. AIT protocol is teaming up with the Bit-Tensor neural network to create a marketplace for machine learning, focusing on mathematics, logical reasoning, and data analytics. It's all about building a marketplace that's truly open and accessible to everyone, ushering in a new era of decentralization and innovation. AIT and Bit-Tensor are teaming up. Now you might be wondering, what's the big deal? Well, buckle up, because this collaboration is all about democratizing access to machine learning. You see, Bit-Tensor has already paved the way with a marketplace for machine intelligence, making it tradable like any other commodity. And now, AIT is jumping on board, making it officially becoming the very first crypto project on the Bit-Tensor network. Now, what does that mean for you? Well, if you're part of the AIT community, get ready to earn some Bit-Tensor tokens and contribute to the mission of decentralizing access to top-notch digital assets and machine learning models. It's like opening up the gates to a whole new world of possibilities. Now, next in line, we've got some big news for altcoin enthusiasts as well. Introducing Bioeconomy SDK version 4. Now you might be scratching your head wondering what's so special about this. Well, let me break it down for you. This update makes it super easy and lightning fast to harness the power of account abstraction for your dApps. Now, what's that mean? It's going to revolutionize the user experience of decentralized finance for everyday folks like you and me. Let's not forget about Solana, because boy, do we have something exciting brewing. Solana's second phone has crossed a whopping 100,000 pre-sales, securing a cool $45 million for development. Now put that into perspective. It took nearly a year for Solana to sell out 20,000 units of their first crypto phone. But the second phone? It's smashing records left and right, hitting that 100,000 mark in just over a month. And the cherry on top is, it's fully integrated with Solana blockchain, meaning it's tailor-made for buying, selling, holding, and using cryptocurrencies seamlessly. Talk about innovation at its finest. So, if you're eager to stay ahead of the curve and make some serious gains in the crypto world this year, you know what to do. Hit that subscribe button and join us on this thrilling journey. We're committed to keeping you in the loop with daily updates, so buckle up and get ready for more exciting news tomorrow. See you all tomorrow and have a good day.